Hi, my name is Michael, and I'm with Back to the Future Trading. I'm one of the founders, and I wanted to talk to you a little bit about a pattern that I'm noticing in bond futures. Bonds have been an increasingly popular futures instrument for traders, and I wanted to share some things that I do with predictive software to help customers and traders like yourself see patterns that banks are executing seasonally as well as temporally in the current time frame that you're watching. So we're looking at a daily chart here today, and I'm looking at ZB1217. Today's date is 9:48 p.m. Eastern on November 15th. And just a quick walkthrough. The indicator that I'm using is an indicator that is called the Daily Cycle Markers tool that we developed about 5 years ago. And the Daily Cycle Marker tool is predictive. In the upper right hand corner, you'll see that there's a note. It tells us that the next event is a phase 4 in 4 days and 19 hours. Well, in the indicator list, you'll see that we have 4 different phases being referenced. A 1, a 2, a 3, and a 4. And just a quick catch up, everywhere you see a little green dot is a phase 1. Everywhere you see a large green dot is a phase 2. Everywhere you see a little red dot is a phase 3. And a large red dot is a phase 4. Now, you'll notice over the course of time that when these phases arrive, there's a fairly predictable reaction. That is to say, the 2s, the large green dots, tend to push bonds up higher over the next 7 or 8 days. And the 4s tend to push bonds lower until the next green cycle. Or the market can go into a consolidation phase, slows down an uptrend. And similarly for phase 1s and 3s. So knowing when those next phases are coming can be a prediction in terms of what the banks have planned for retail traders. So one of the first things I look at when I'm studying patterns and predictions for larger movements is what phase I'm currently in. And as you can see here, I'll pull this red line away. We're currently engaged in a phase 3, this little red dot right here. So the first analysis tool that I look at is what phase are we in? And currently we're in a phase 3. So the very next tool that I deploy in terms of understanding where bonds would be going next involves something known as a constellation analysis. And a constellation analysis is an idea focusing on the phases in relation to market structure. So, for example, notice with me very quickly that there's a market high right here. And then there's a cascading effect, sort of 3 legs down. Can you see that? Well, the pattern starts with a green dot at a higher high. The pattern starts with a green dot at a higher high. Now, that's a very unusual pattern in time. Let me show you something real quick. I wrote a book a number of years ago that identified certain time-based patterns. And there's one in particular that I'd like you to learn about. And I'll put a link to this in the blog post. It's called a pattern 5. And when you see a buying pressure signal like this green dot at a higher high, the market tends to reverse and go in the opposite direction. That is to say, when a green dot is in this direction at this time, it tends to reverse and behave like a red dot. So keep that in mind as we go and look at where this move started. So we have a higher high green dot and then a drop. That's why that red arrow is there. And this is the constellation I'd like you to focus on. Okay, and I'll enclose this with a box. There we go. So the components of this constellation involve 3 waves down, where each of the highs of the 2 waves are surrounded or near a phase 2 signal. And so I sort of have these 3 components. I have a phase 2 at the high. I have a phase 4 at the second high right here. I have a phase 4 at the third high. And then down here I'm calling this a 3A, a phase 1 towards the bottom. And then a phase 2 right next at the 4th point in the constellation. So think of it like the Big Dipper or Orion or any one of a number of astronomical constellations. These dots are sort of like stars, and we're connecting the points of the patterns in the star constellation. Okay? So you'll see why that's important here as we move on in regards to what I think is going to happen with bond futures next. The next thing that I'm doing is keeping track of what day we're at. So today, as we mentioned, is November 15th. And what I'm going to start to do with you is essentially the following. I want to look for this constellation around November 15th, previous years. I want to look for constellations that start with a green dot at the high, and then these phase 4s at the second and the third high. Okay. Let me take a walk with you backwards here and show you what I mean. I'm going to go all the way back to here. So this is 2008. And remember what you just saw. We have a green dot starting it off in the upper left corner of our pattern. Okay, that's where we had number 1 before. And this is back in September of 2008. Okay, remember how the pattern then proceeded? There were 3 waves down into a bottom that we called 3A, where there was a phase 1 little green dot. And then there was a phase 2 where I had the number 4. Okay? And I want you to see where this blue line is. This blue line is November 14th of 2008. So we have the components of the constellation around the same time of year, quite a number of years ago, 2008, right? 9 years ago. And so we have the first high, the second high, the third high, the low, and then watch what happens after this blue line. There's a pop up, and there's a continuation up into at least the next red dot, the fat one, the big red dot. Okay, so keep that pattern in mind, and now watch. I'm going to fast forward all the way to here. First high, second high, third high, little green dot, large green dot, little red dot right here. And so 9 years ago, the market continued higher than the little red dot into the next phase 4, which is coming again in 4 days and 19 hours. Well, let's see if there are other examples of that pattern. We'll go all the way back to our first example, and then we'll fast forward 1 year. And now we're in 2009, and the blue line represents where we currently are in time, November 13th. Now look and see if you can identify the elements of the constellation that we're looking for. A green dot at a brand new high, starting up over here where I have a number 1. The second high, the third high, the bottom, and up we go. So there are 2 years in a row, 9 years and 8 years in the past, where we have a bottoming effect from a new high, sort of a bull flag, if you will, and then a move up into the phase 4, the large red dot. Let's continue forward in time. Autofocus. And here we are in 2010. Now, 2010 had a slightly different pattern. There wasn't a green dot at this point in October. There was a red dot, a phase 4. But we still have the stereotypical what? First high, second high, third high, and then the bottom. And so in this instance, there's sort of a critical there's a critical point where we're exactly at this point in the cycle currently, at this little red dot, the phase 3. And so it wasn't able to close above this red dot. So freeze this in your mind for a second, and now watch as we come forward into the present. This is exactly where we are currently in our cycle. There's our red dot. And notice here how it hasn't yet. We don't know what tomorrow will hold. Tomorrow is Thursday. We don't know what will happen when it closes above, or if it ever closes above, that red dot. So this is an important point in the cycle right here in relation to the current cycle that we're studying. Okay. So we'll go a little further back. This was the cycle we were just looking at. Again, we're looking for a close above the red dot, and that would tell us if there was going to be a continuation back up. Notice also as we come into the phase 4 that there's a selling effect. So the phase 4 after this little red dot, in this example, but not in this example, all exhibited selling pressure tendencies. So 2 out of the 3 so far, the market either stalled and broke out or pushed down. But there was a net selling pressure effect at the phase 4 in that constellation. Let's continue forward into the future. Here's the next variation of this. And now instead of a phase 2 at the high, you can see here we had a phase 1. There's the first high, the second high, and then the third pullback. And now the phase 4 in this example. And here we are in 2011. So this is 6 years ago. And from that point forward, we go up into the phase 4. And again, this is 3 out of 4 times we see selling pressure into the next phase 1. So 3 out of the 4 years so far with this constellation around this time of year exhibited buying pressure into the phase 4 and then a sell-off. Let's continue. Here's the next example. Where have we seen this before? The constellation, again, has the same components at these time cycles. And this is in 2012. We have a corner that starts with a large green dot, a phase 2, at a higher high. We have the second retracement. We have the third retracement. We have the bottom with the little green dot. And then we have the next start of the move, the phase 2, or the fourth star in the constellation. And now here is where we are exactly in time right now, that little red dot, right? And in this example, can you see how we closed above the red dot? When we close above the red dot, we know that we're going to continue higher into the phase 4. And now here we are, 4 out of 5 years in a row, a sell-off occurs at the phase 4, this large red dot, which we know is coming in 4 days and 18 hours. Let's continue. So here's the season Here's September, October, November of 2013. This is 5 years ago. And the pattern starts, in this case, with a green dot at a higher high. And then we have the next component. Let's fill it in. We have the green dot with a higher high. Then we have a red dot at the first pullback. We have a red dot at the second pullback. And now here's that bottom with the little green dot. This is exactly where we are in our present day cycle. The phase 3 after the fourth element of the constellation, this phase 2. And you'll see here that this also represents a bottom. The market, in almost every instance so far, at the phase 4, with one exception, has pulled up and out of that area into a higher high. One thing of note in this year was that the phase 4 did not sell off. It continued to climb higher. Okay. We fast forward here, and this year kind of threw me for a loop. This is 2014. And the elements of the constellation are here. There is a higher high. There is a bottom to the move. This is where I might call this 3A. And this would be the fourth element here, that large green dot. And if that's the case, look, this is where we are in time. This is November 14th of 2014. That little third phase red dot is, again, where we are relative to the present. Take a look at that. And then take a look at this. There's that third phase. And so if we scoot back over here, you'll see exactly where we are. And again, what tends to happen after this point in the constellation is a rise into the phase 4. Let's move ahead. We move ahead 1 year into 2015, and we have the same elements of the constellation for bonds that we've had most of the other years so far. We have the market moving up into this fat green dot, which is at a higher high right there. Then we have the first pullback, the second pullback. There's that first fat red dot. Here's that second fat red dot down here in the corner. It occurs a little lower than the other one. And now look, there's our bottom, 3A. And there's our fat green dot right here. And this is that telltale bar. This is that same bar we keep looking at, that little red dot, phase 3. And notice again, the direction after that point is an acceleration up into the phase 4, which may or may not be a temporary high. And in this case, the majority of the time, I think at least half the time, there's a very forceful, punctuated move on the close of that phase 4 day, which again is coming in 4 days and 18 hours. So we'll fast forward 1 more year. And this one, I really had a hard time because I think the pattern was, in all honesty, shifted ahead. There was such a hard sell-off into 2016 that the constellation didn't show up until later. See if you can see it. There's the green dot at the higher high, the telltale pattern 5 right here. That's the first element. Then we had the first pullback into this high. There's the first large red dot. Then we had the second pullback into this high. There's the second large red dot. There's our little dot towards the bottom, and then the number 4. Here's where we are in time right now. But this one happened March 20th of 2017. But again, look, this is where these are the 4 elements of the constellation. They occurred in the future in relation to bonds did in 2016, but the constellation is the constellation. And again, look at what happens after that red dot, at least into the fat phase 4, where the banks try to drive it down. There's an immediate profit-taking session. And then we fast forward into where we currently are right now. And again, those same elements exist. Large green dot at the high, the first of the two fat red dots, the second of the two fat red dots, the little telltale bottom, the fat green dot, and then that hard down move on the phase 3 where it starts to push up and go. Okay, so only out of, I think, 1 or 2 of the years so far did the market tend to go this way. And most of the time, it tended to go that way. So let's talk about the this way versus that way. Because the third thing that I teach my students is something called an exertion analysis. How far did the market go when it went up? So let's try back here first. We go all the way back to the first pattern in bonds. Now check this out. From the close, let's say from the low of the phase 3 candle right here to the phase 4, how high did it go? It went that high. Let's go ahead and we'll make this, I don't know, some color that's real easy to see. Make it lime. We'll make it fat. Okay, so it went that far. Now, what I'm going to do with some difficulty is I'm going to take this green arrow and I'm going to put it over here. Watch what I do. Here's the bottom of our current phase 3. And if we take the exertion of the first year, back 9 years ago or so, it went this high before the next phase 4. Okay, so that's our first exertion test. Let's come take a look at the second year. See what it did. Okay, year 1, year 2. Ready? This one, from the low of the little red dot pattern here to the high by the phase 4, was this. So we're going to do the same thing. I probably should just make it standard since we're going to do this a couple times. And now I'm going to harvest that for our exertion analysis. I'm going to bring it all the way into the future. Matter of fact, let's just cut to the chase and bring it over here. Okay, so here's the second of the two arrows, and that's how far it went that year. Okay, let's go back to the third year. 1, 2, and now here's the third pattern. Now this one paints a completely different picture. This was the oddball, remember? From the close to the high, it went that far. But then from the close to the low before the phase 4 went this direction. Okay, so it went up, but then it also closed lower by then. So what I'm going to do is I'm going to scrunch up our chart. I'm going to take these two arrows. Oh, I already messed that analysis up. Let me fix it for us. It was hard to grab that. Right there. Okay. So now I'm going to take those green arrows. Yeah, there's no simple way to do it, is there? Here we go. So I'll take this little guy and we'll put it up here. And that was how far it went that year. And vice versa. If we grab that other little green arrow, the one that's pointing down, it'll give us a sense of how far it falls if in fact the opposite is true by the phase 4 signal. What I'm going to do is I'm going to pause the video and fill in the rest of these lines so you can see what the net result is. Okay, so when we get most of the lines here from the prior years and we measure where the market went before the next phase 4, again, which arrives in 4 days and 18 hours, I want you to notice that there's a couple things that happen. Number one, there's always an outlier in an exertion analysis. There's always the one that went really far. Then you kind of have the minimum, and then you have the middle or the median. Take a look at where the middle all lines up. So I'm just going to draw a box from the highs to the lows. And I want you to see here that statistically speaking, bonds over the last 9 years, based on this constellation pattern and where we are in time relative to November 14th, gets at least to 155, 155.13, and quite possibly between 156.23 and 157.18. Okay, now we figured out a lot just by using time cycles, predictive time cycles, no less, analyzing the patterns in relation to their bank play or constellation, and then measuring over the years what the average move is, how much energy the banks exert at this critical time in the anticipated direction. Okay, so that being the case, over the next 4 days, the farther we move away from this area, the more potential there is in terms of risk reward to end up popping the stops at this high. Does that make sense? Now, is there any guarantee that that will happen? No, absolutely not. But when we study the markets this way, we can anticipate and discover these kinds of patterns in advance. And right now, the market makers have not made an attempt at a stop run of this high yet. And we know that's how they work. They lure people into traps. They manipulate the markets just to get volatility running. And all of these little green arrows to the right seem to indicate that there's an intention to pop that stop before we get into the phase 4. And then quite possibly on that phase 4, have another one of these sell-offs when we get to that big fat red dot day. All right. This analysis took about a half an hour. And so I'm grateful that I had the opportunity to prepare this study for you. Please feel free to let me know what your thoughts are. This is just my initial examination. There are ways that we can go even deeper into this, but I want to introduce you to the kinds of things that we're looking at here. If you want more information about us, our website is backtothefuturetrading.com. And if you click on the product store, the product that I'm currently using is from our Tachyon Alpha page. That's where we have our longer term end of day position signals. And for those of you that are more intraday, you probably want to focus more on the warp or the prime for intraday signals. Thanks again, everybody. I hope these analyses were useful for you, and if nothing else, get you thinking about time and bank movements in a completely different way. Appreciate you. Bye-bye.